Hello everyone, it's Saad Rahman and welcome back to my channel. Today I'll be going through to another tutorial and it's going to be about sources of finance. So, sources of finance. Sources of finance. So, what are sources of finance? So, sources of finance are types of capital a business uses to help expand and grow the business. So I'll go through you some internal sources of finance, if you've heard of them. So one internal source of finance is retained profit. Retained profit. So what this type of profit is profits which are reinvested back into the business. So profits which are reinvested back into the business. So what this means is any profit that business has gained from selling goods and services, this profit has been reinvested back into the business so it can be used to help pay for external costs and help expand the business. So what, for example, staff, right? A business can use the profit to pay for more staff, more employees maybe, to make work much more easier. And what else? You could also talk about managers as well. More managers. Another type of internal profit is sale of assets. Selling of assets. So what this type of profit is that it's when a business owns a product that is no longer needed. And a business owns a product which is no longer needed anymore. So what that means is the business just doesn't really need the product because the demand for the product is not high. Demand is low. Another one is owner's capital. That's another type of internal profit, internal sources of finance. Internal sources, let me underline internal sources. So owner's capital is the amount of capital invested into a business by the owner. And the word capital here, the reason why we use the word capital is because that means money. The word capital in business is another word for money, but it's a more fancier word. Money. You could also use the word finance as well, but it's better to use the word capital. So the amount of capital invested into a business by the owner. That's what owner's capital is. And you know how he gets the capital? Through personal savings. So personal savings. So that's all his saved assets. So any asset that he saved up from the making of the business, that's his personal savings. Making of the business. Saved up assets. Yeah. So that's all his personal savings. He can use the personal savings, any savings that he's earned, to help reinvest into the business. Invest into the business. And what else? I'll list some external sources of finance here. External sources of finance here. There's not a lot of space, but external sources of finance. One, we could say bank loans. Bank loans. So what they are, a startup business asks a bank to borrow a loan, for a given period of time. For a given period of time. So what that means is, a business that wants to start up, for example, let's say an entrepreneur, right? A person who is willing to take the risks and wants to start a business at the same time for a profit in return, he'll ask a bank for a bank loan, and that bank loan will help him start up his company and help pay recruiting staff, hiring new employees. But the loan that he's borrowed from the bank has to be paid in a period of time. So in business, that's also called current liabilities. So current liabilities is a debt that business has and has to be paid back in within a year. So I'm not going to write current liabilities down, but describes the bank loans. Another source, and that's long term as well. Another source is an overdraft. So what this is when businesses can agree with the bank to borrow more capital than there is available. This is the more simple definition of an overdraft. The more complicated definition of an overdraft is it's an agreement with the bank where businesses can make payments from their bank account receiving the available cash balance. So the amount of cash balance available is lower than the amount they have borrowed. And another one is venture capital. So what this is, venture capital, I didn't think I space here. So it's when investors use specialist funds to help reinvest and grow a private limited company and grow a PLC, let's say, private limited company. So that's what venture capital is. So these are your three external sources of finance. So I hope you got it, and so that's what I've got to say today. So if you enjoyed my video, please give a thumbs up, subscribe, like, comment, and share this video with your friends so you can help promote it. So until then, I hope you guys learned something. This is not just for the business A-level spec, this is for the BTEC specification as well. And this will go very well with level 3 national extended diploma. Yeah. There's not just A-level, guys, it goes for the BTEC specification as well. If you're interested in doing it, yeah. So that's all I've got to say. So yeah, guys, enjoy your day and peace out.